here from Sage Investors, and this is take 32. So, regular followers, for my regular followers and listeners to our podcast and our videos will know quite well. Uh, I put some takes out earlier this year, take 24 to be exact, on what I thought would be the key number one investing theme for this year. And for me, it's sadly, it's all about the US election and really the ramifications and the implications that it could have for us as investors. To my surprise and to my disdain, I guess, that episode that I posted earlier in the year is aging very well. And many factors that I talked about playing out uh, at that time are playing out now. And I think that we're probably, not probably, I think we're well on our way to getting to what I call a negative game changer moment. And that's what I want to talk about today is this negative game changer moment. And really to give some definition, my definition of a negative game changer moment from an investing perspective, it's an event, it's an action, it's a decision that's made that shakes the foundation of a company, a stock, an institution, an industry, a product, and in this case, a country, and in this case, beyond the borders of the United States. Here's some examples of negative game changer moments and how they can negatively impair a stock price or stocks over a long period of time. Like to me, like some of the bigger game changer moments that we've had have been more um, I guess company specific and to a certain extent geopolitical. So one was, for me was the iPhone, um, how much that changed and literally disrupted and literally destroyed so many individual industries in terms of, cameras and videos and video games, messaging. Before the iPhone, there was the BlackBerry, and that was considered the it device. And the iPhone came and just literally blew it all up. That's one. And so that, from a company perspective, BlackBerry was never the same. Nokia was never the same. 9/11, we remember all the horrors of 9/11 and how it's changed and totally disrupted the whole air travel industry. Uh, and then the most recent one that I can think of in terms of a negative investing game changer moment is China and how they literally went out and kind of uh, culled or shackled its own high-tech industry. They had darlings like Alibaba and Tencent, and the government there just literally overnight almost put them into bankruptcy because they were just not happy with the ability for them to run amok and how they possibly, Jack Ma and how he just literally got sidelined. And after that point, it just made us all wonder. It's made me wonder to take great deal of pause of do I want to put money in China, into China and Chinese stocks, knowing that literally companies could get flipped over overnight for no real reason. So those to me are negative game changer moments for investors. And I think really, the way things are evolving, I think what we're seeing play out right now and what we could be seeing play out in the next few months and potentially the next few years could have a significant negative impact for investors. And the game changer moment, the negative game changer moment is the prospect of having a Mad King 2.0 come into play, and to a lesser extent, an Uncle Joe 2.0. And I think we all painfully saw in the debate that what's really clear wasn't just that Uncle Joe just doesn't seem ready for this thing anymore. It's the other guy. It's the Mad King. And you got one hand, you got a compulsive liar and is happy to be a compulsive liar. He only wants the job for revenge. He doesn't want to make the country better. He just wants to be crowned king, and he has so much dictatorship envy. He wants to live a dictatorship kind of lifestyle, this kind of mafia lifestyle. That's his value proposition. Meanwhile, we got the other person who, you break it down to it, he seems like a decent person. He tries to speak some level of truth, but I think we're at a point now where it's not about policies. It's not about, what have you done? It's more about, can you just stay up? Can you just stay awake? Can you just not fall down the horrible slope that is dementia? And to me, it's a little bit close to home because my father has been suffering from dementia for the last 5 years, and this year he's going to be 85 years old. And obviously Joe Biden is definitely not where my father is right now. But for the expectations of doing that job, he's definitely not there now. And ultimately, he needs to put the country before himself and stand down. And the whole thing that's really frustrating is if he rides this out, um, and somehow he pulls it off and gets reelected, somehow, if somehow he could swing that, the next 4 years on this side of it are probably going to be a pretty painful watch. Um, the irony of it all is he's got a good story to tell. The economy's doing well. He got the country out of, the COVID concept stem. There's still, remnants of it. He recognizes the need that the climate change. He's really to commit the infrastructure spending to get to that point, and people respect him around the world at a certain level. He's got a good story to tell, but he just can't get it out, and the debate kind of exposed that. And in the meantime, so that's what's sucking all the oxygen of what should be, a normal election campaign. This week he's going into these NATO meetings, he's doing a press conference, and nobody's talking about any of that. They're all looking for the gotcha moment. They're looking for him to screw up again. And we're not hearing any of that substance right now. We're seeing two pretty old guys who have really no business being on that stage. And this is where the seeds of what I think are a really significant negative game changer moment for us as investors are being sown. Uh, the other place where those seeds are being sown are in the Supreme Court. That's a whole other thing um, that I want to get into. And I've talked about this, and I know I've been posting some TikTok videos and things like that about it. And I'm just saying, I'm probably sounding like a broken record, but the situation, the stakes are so high right now. Um, we have to be a broken record, and we have to keep spouting it out. My take is definitely the American economy, the US economy, the US financial system, the whole stock market, the whole principles of capitalism. It's really around the US, and it has been the dominant economy, the dominant um, environment for business over the last 100+ years, and it's created so much wealth. And a lot of it is because of its stability, its political stability, and the rule of law. I've said this before, I'm going to say it again. It's no fluke the reason why US equity indexes and US stock markets trade at high multiples compared to other stock markets around the world. It's because investors are willing to pay a premium, putting their money, their hard-earned savings into the US, knowing there's a high level of stability in the institutions that run the country. There's a high degree of stability and in terms of how business is conducted through proper rules and regulations that protect other businesses, that protect citizens, that protect consumers. You can't say that for Russia or Argentina or Hungary or China, whose stock markets trade at much lower multiples and are quote unquote cheaper than the US. So to invest in the United States, to put money into US assets, is to pay a premium for that stability, that political and economic stability reinforced by a rule of law that attempts as best as possible, and it's by all means not perfect, people as equal and as fair under the guise of a rule of law, protecting people from the harms of others, other companies, other businesses. And it's called regulation. And we'll talk about that because we might be on the verge of a significant business event that could have far-reaching impacts on how the US economy is going to function going forward. So ultimately, we put money in US dollar-based assets, whether it's stocks or bonds, buying companies, lending money to the government, because there's that underlying assurance that barring a bad business decision in terms of allocating that scarce capital, that principle of capitalism, ultimately, as investors, we can feel confident expecting full and secure ownership of those assets that we invest in. Property rights, we talk about property rights. If you lend money to the US government, you can ensure we can sleep at night knowing that they're going to pay us back. The rule of law is the foundation of capitalism, and it's the number one underlying reason why the US is economically has been the dominant country around in the planet. And if you break that contract, if that contract gets broken, if institutions that uphold that contract are broken, ultimately the rule of law will provide those checks and balances and will penalize and hold people to account. Now, what I think has happened is that principle of what capitalism is all about has been eroded. And I think a lot of it goes back to, you can go back even farther, but I think one of the moments that I recognize is where we've seen this kind of slippery slope started really with the financial crisis in 2008. And in the moment government started bailing out banks, which had no business being propped up, being around, and were being propped up. And I think what we have been seeing is a very slow erosion of some of these core tenets of capitalism. And I think now we're in a situation now where that erosion is just becoming like an earthquake. The events that we've seen in the last week and the potential impacts that may have in terms of the upcoming election in the United States, really, I never thought we would, be here. Those tenets that I'm talking about that I really have held up and have solidified the United States, I think they're in play now. They are in play, and I think they're in serious jeopardy. And as an investor, that concerns me. The prospect of having a Mad King 2.0, who pretty much, thanks to the Supreme Court, has been given, if he got back in, essentially would have carte blanche to kind of gut everything that represents the rule of law. And most of his ideology is driven by revenge. It's driven by this Godfather mafia kind of loyalty mindset. In version one, he probably could have gone there, but he had some people around him, some of the remnants of the old style Republican Party who kind of held him back. And so there were some adults in the room at that time. Not that many, but there were enough to kind of hold things back. If he gets in again, version 2.0, it's going to be truly, he's going to have his minions and he's going to have his stooges. And this time, though, they're not just going to walk around, they're game planning it now. And we've all heard now, even though this has been around for like literally a year, Project 2025, or I like to call it basically the Mein Kampf of the 21st century, it's out there. And he's pretty much got the blueprint of how he's going to shake this thing down or tear this stuff down. And I guess what's kind of scary about all this is, like, we saw it even in the election. And we're not even going to take office, but the tables are set for some serious disruption in terms of some of these core foundations of what has made America a really truly dominant economic power. And it's literally, we're seeing it all happen in slow motion. The Supreme Court, again, filled with some of these stooges, is enabling a lot of this. And again, the events of the last 2 weeks have hit a couple of items that I think are just setting the table for this downward slope. First of all, they rubber stamp the job description of really what a dictator is and what could be in the United States, by giving a president basically full immunity. You can get into the minutia of it, but basically, it's like he could do whatever the heck he wants, he or she wants. The second one, which isn't getting enough discussion, but I think is even more potentially decimating to the US economy, is the whole decision by the Supreme Court to gut the Chevron, what was it called, directive, which basically takes away any authority that government institutions or regulatory bodies um, have in terms of issuing policies to protect consumers, to protect companies, industries, ensure people can compete fairly. The Supreme Court said, you know what? Yeah, don't worry about it. They pretty much made a decision that companies can essentially are enabled to pretty much run unfettered and do whatever they want, whether that negatively impacts consumers, its customers, other companies that they're competing with, essentially screwing people. And this kind of comes very close to my heart, given what I do as an investment coach. The reason why I started or evolved into becoming an investment coach and having a practice is to help people become more street smart, dealing with banks and financial institutions, selling them products, selling us products and services that may not necessarily be in our interest, but may be totally in the interest of companies. And I do this through education and practice and teaching and empowerment to have people more street smart so they can take control of their finances. Now, the Chevron deference that's deference, that's what it's called. Um, this has been, we talk about abortion and that thing, but the Republicans and a lot of the libertarians have been very much against all of this. They don't believe governments should have anything to do with anything. It goes back to these core principles, Republican principles. And if it means people are getting screwed over, well, so be it. And what this does, bringing it back to sort of the banks, is it gives banks, the financial services industry, it basically enables them to just give these regulatory bodies like the SEC, it basically gives them the finger. And if customers, you got a problem with how the banks are doing things or what they're charging you for things and how they're, skimming money and charging you fees, the approach is don't take it to the regulatory agencies who can issue rules to control that behavior. They say, just sue us. Go ahead, bring it. We'll just lawyer up and we'll just drag it out. And ultimately what this is doing and what the Supreme Court has done is saying, you know what? Take the decision making out of these government regulatory bodies that contain people that are very knowledgeable and have a specialization and an expertise in a variety of different industries and a variety of different services and specializations. Take it out of the hands of those people and put it in the hands of the courts, who are not as well versed in these type of elements. Now, the free market capitalist folks are going to probably say, we don't need this regulation. This is pure capitalism. We'll manage it. The market will decide. Free markets will take us to the right place. And as we learned in the financial crisis, it doesn't necessarily go that way. Their premise, let the courts decide, litigate the hell out of everything. And that's what's happened. It's essentially given companies and organizations a get out of jail free card for those who can pay to play. And from an investment perspective, when you're looking to where you're going to allocate capital, yeah, from one perspective, it's about free markets and everything like that. But on the other side, for those bad apples out there that can ruin it for everybody else, it carries risk and it carries high opportunity costs. Now, all this decision, this Chevron decision, I don't think is going to do anything in the next 5 months. It's not going to, I don't think it's going to change the outcome of the election. I don't think it's going to get people upset because I don't think everybody's really aware of it. And the media just totally brushed it over. But I think in over long term, this is just another episode. And to me, it's a negative game changer moment, which I think could have significant negative impacts on American business. And ultimately, the vibrancy and the profitability of the companies around it. Because of this rule of law becoming eroded and skewed, and then have the enabling of a mad king to just speed it all up. This is serious stuff. And what scares me is that by the time everybody wakes up and realizes all this, the cement will already be set and it'll be harder and harder to get out of it. And this is the part for me that, I didn't even like, I've never ever thought we'd be here, be talking about this. And this is the part that makes me really take pause about, how I'm going to make decisions in the future. Because always a decision, part of it is how much money do I put in the US? I always want the default that you got to have some money put apart in the US because of all of these stability factors that have made America truly the dominant economic power. It's kind of ironic that, right now we've got elections in France and UK. Here in Canada, we're going to have elections next year. And everybody's talking about how France is in crisis, UK is in crisis. But they had orderly elections. They had peaceful transfers of power within weeks. But meanwhile, in the birthland of democracy, in the birthland of capitalism, we've got an emerging dumpster fire going on here. But hey, it's all good because the S&P 500 and the NASDAQ are all-time highs. Forget that it's only 7 companies driving the market. And forget like there's a record high being set every day. It's all good over here. Meanwhile, you got 2 guys with dementia battling to kind of lead all this. The laws of the land are being established by really a group of unelected people with political ideologies driving a lot of their decision making, demonstrating some behaviors that are no different from a Taliban-esque kind of ideology. And the mainstream media is just adding fuel to the fire and enabling all this, or just looking the other way, because this is ratings. So what are the qualities of dumpster fire countries, dumpster fire economies? Well, they got a lot of inflation. They got low growth. They have consumers that are scared to put their money in anything. They'll hold their money and will probably hold it into harder assets, hold back consumption, and you get this vicious circle. And that's what the markets are starting to talk about now. They're finally woken up to something and realizing, hey, if any of these guys keep going, it's just going to jack up the debt. And at some point, investors are going to say, why do I want to park my money here? So, we can game this all out in different scenarios, kind of choose your own adventure. And at the end of the day, for me, it just keeps coming back that we're in a situation where we could be on the verge of a mother of all negative game changer moments as investors. It'll be an economic pandemic. And so usually when I get into these situations, when I identify these negative game changer moments, that's the part where you just don't want to go there and you kind of want to go the other way. And that's kind of where I am right now when I'm trying to figure out how I want to make my decisions in the future. It's just, I'm really finding it hard to want to put money into companies and businesses with this backdrop right now. I don't even know how I could, like, I haven't been putting any money to work. I've been mostly focusing on fixed income, looking at that side of it, which again, I've never really done so much in my entire um, career as an investor. I'd love to, but I'm really finding it hard to do right now. And this is creating a lot of, just a lot of issues and a lot of pause. And this is the struggle I think we're all, as investors, we're walking into. Um, and so what does that mean? It means we're in a situation right now that we, as investors, have to start coming to grips with investments outside our comfort zone, owning bonds, materials, owning stuff, rocks, God forbid, crypto. Maybe this is the moment. We've been hearing so much about crypto in the last 10 years about, this is the dominant alternate currency, alternative form of, asset class. Um, are we heading into a moment where it becomes ready for prime time? I know I've commented many times that it hasn't been ready for prime time. It has numerous opportunities to step into that spotlight, but it has failed to do so. Are we in that point? These are the types of questions now I find myself asking. I would love to talk about, analyzing companies and stocks and figure out, whether I should buy Nike or sell Nike or, Nvidia's, that's it. That's investing right now. It's Nvidia. And no, it isn't. Lots of great companies and businesses doing really cool stuff whose stocks are basically getting ignored. But it's hard to want to, as an investor, want to allocate my savings to companies that are operating in an environment that is just eroding the stability and eroding the value proposition of what's made that environment so profitable. So I'm concerned in the sense that we really are at a stage where we might be walking to this truly negative game-changing moment. And I think it's important for all of us as investors to be aware of it. And that's what I'm talking about today and talking about my concerns. That's really keeping me up. And just be ready for it and not to overlook it. It's again 34. I think last count, the NASDAQ has set 34 record highs this year. And if you just go by that, everything looks good. But open the hood of the S&P 500, open the hood of the NASDAQ, it's a handful of companies running it. There's just a lot of things right now that are very unsettling. I mean, the take here is just be aware of it. Be ready for it. Be ready for scenarios that may not pan out, that may provide some serious impairment in the value of assets. Because if all this stuff does go down in the US, the world isn't a bubble. It's going to feel the ramifications. I own Canadian stocks, I own stuff in Europe, things like that. There's going to be ramifications. So to me right now, as I said, bringing it back, the number one investing theme right now is what's going to happen in the US in November. Because the seeds of a negative game changer moment are at hand. Those are my takes. That's my take for today. If you got any questions, you can reach out to me on my website, sageinvestors.ca. You can reach out to me on our YouTube channel. Just do a search for Sage Investors. We're on LinkedIn. We have our company page. We post stuff over there, and we're also on Threads. Be interested in hearing your take. Honestly, I never thought I'd be talking about stuff like this, but here we are. Let's be careful. My name is Amin Reina from Sage Investors. This has been In the Loop. We'll catch you again another time. Take care. Bye bye.